Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Friday, August 14, 2009. Following a two-session rally in the euro-dollar pair, today's overnight action was limited, with the pair setting a high near 1.43 at the start of New York trading. However, a weak consumer confidence release from the U.S. jolted the markets and sent the pair downward in a move of risk aversion. The pair's fall fell about 135 pips from that high to trade near 1.4165. Today's action undoes part of the gains seen in the euro from the middle of the week, which had managed to reclaim its losses from the beginning of the week. The dollar-yen pair, meanwhile, fell in favor of the yen today, extending this week's decline in the pair. The yen broke below a trendline of support and has managed to pair all of the Greenback's gains from last Friday. The yen strengthened the past two sessions as we've had two reports now from the U.S. pointing to weaker consumer spending in the form of disappointing retail sales and today's consumer confidence. That followed a big surge in this pair following last week's better-than-expected non-farm payroll release. The U.S. consumer confidence dipped in August. Preliminary data from the Reuters University of Michigan Sentiment Index showed. The overall index fell to 63.2 from 66 in July, with the current situation index leading the decline as it fell from 70.5 to 64.9. In other releases from the U.S., consumer prices were flat in July following a surge of 0.7% in June. On the year, prices were down 2.1%, the largest annual decline since 1950. Excluding food and energy costs, prices rose 0.1%, which means energy costs actually contributed to a decrease in inflation, as energy costs decreased 0.4% and food costs were down 0.3%. The threat of inflation from the massive injections into the banking system conducted by the Fed have so far not materialized, as the economy remains weak and stores and companies offer discounts in order to lure shoppers. That could give the Fed the leeway it needs to keep rates low for an extended time as the economy begins to recover. U.S. industrial production rose 0.5% in July, the first increase in output in 9 months. The jump in production was facilitated by automakers, mainly GM and Chrysler, as they reopened their plants shut down during their terms in bankruptcy, as well as the increase in demand created by the government's Cash for Clunkers car program. The utilization capacity rate, which measures the proportion of factories in use, also increased from its lowest level since records began in 1967. Companies have heavily drawn down their inventories the past 2 quarters, which sets the stage for a rebound in growth as these companies place new orders with manufacturers to refill their stockpiles. Stocks slid in the last hour of trading in Europe, putting them into the red to end today's European session. U.S. stock indexes, meanwhile, were off more than 1%. The pound yen slid about 200 pips to retest its low from Wednesday, and the rally from midweek now looks more like a correction to the slide in the pair from last Friday through this Wednesday. The pair found support at the 156 level, which acted as support before, and we'll watch where the pair moves from there to start next week. Another pair that relies on investor sentiment and risk appetite is the US dollar-Canadian dollar pair. Today it saw a move in favor of the greenback, with the pair rallying 175 pips, peaking back above the 110 area. Similarly, the Aussie, another currency linked with commodities and growth, fell today after setting a new high for the year at 0.8475. The Aussie-US dollar pair declined from that high prior to the New York Open, but in the wake of the U-Mish report, the pair plunged another 150 pips to fall below 0.83. Though next week is lighter on key fundamental releases, there'll still be some important reports to watch for. Early in the week, we will get second quarter GDP data from Japan, UK consumer prices, the German and Eurozone ZEW economic sentiment indexes, and US producer prices. And that concludes our coverage of the Forex market for this week. Thank you for joining us here at CMSFX.com, and from all of us here at CMS Forex, have a great weekend.